Aloha everyone, Joshua Hayes at BigWaveTrading.com. In this weekend's market update, we're just going to really focus on the SPY, take a look at the VIX, and two key sentiment indicators that I track to kind of gauge where we're at regarding a possible market bottom. And then I want to review actually 1, 2, 3, 4, 5, the last 5 signals that I have received but not taken on my end due to my forced trading restrictions due to the current account drawdown from the 2019 highs. So let's start it off with the SPY. First off, we're going to do a multi-time frame analysis of the SPY just to put things in perspective. So what you see here obviously is a Fibonacci retracement from the highs to lows. You have the 23.6, the 38.2, 50, and the 62% retracement levels. You also have key price resistance lines, the most bold white lines you see here, and then of course multiple moving averages. On top of that, what you do not see here are Fibonacci symmetry retracement levels, which would connect this low to this high to this low. The telechart doesn't have them. You have to use Thinkorswim or a different charting program. So I draw a symmetry level from this level to this level to this level. Probably should have wrote those down before the video, but I'll just show you how you can do it on toss. Take this low, measure it to this high, to this low. You could also, those are the ones I'm using. Those are the two main ones I'm using. So let's ignore the rest. So 1, 2, 3, 1, 2, 3, and you'll have other resistance levels. The reason why I bring this up is because on the short term, the SPY is moving higher off the lows. That being said, while I do see some constructive chart patterns out there, I see a lot of chart patterns that since they hit this low in individual stocks and that have rallied, they've come back down and they've actually either printed new lows or are nearing new lows, multiple stocks. But right now, I just want to focus on the SPY. So short term, we have a consolidation going. That move higher is being accompanied right now by lower volume. That is not good, okay? You want to see volume surge off a low, not good. We also found resistance right at that 38.2 Fibonacci retracement level, which also lined up right with the 21 EMA. But since pulling back, we are holding the 23.6. So for now, it's kind of an open book. The volatility stop is below our current price level, which indicates that short term volatility is on the side of the bulls. The PPO histogram is positive on the histogram. It's positive against the signal line, but the signal line and the lead line is below 0, which is indicative of a bear market bounce, not a bull market uptrend. You can see here that during the past year, even when we were rallying here, once PPO got over the 0 line, it pretty much stayed above it and or straddled it. It's well below it now, and now it's moving higher. The TTM squeeze momentum is bearish, but it's been building towards a positive level, and we're entering a loose squeeze. We'll see which way we come out of it. And also the TSV is positive on the daily basis. But that's the shortest time frame. Let's work our way out to the weekly chart in the SPY. We have the same conditions, obviously, with all the overhead resistance. Remember, 38.2. Let's just use the daily for this again, just to show you all those different resistance. 21 EMA, 38.2, this major price resistance level, this Fibonacci retracement level, this major price resistance level, this Fibonacci retracement level, the 50, 200, and 100 simple moving averages, this price resistance level, and then, of course, the all-time highs, which is that dash line where we start the Fibonacci retracement level. So we think about all the overhead resistance, and what do we have as support? We have the recent lows. When I go further out on this chart, the next line I have is this low here, which cuts through major inflection points in the daily chart. Swing down, swing back up, swing down, swing back up. It's all around this area, and that's right around the 200 level. No surprise there. After that, the next support level is 182, which is basically your 2016 and 2015 lows. So those are our 3 major support levels, along with that 23.6 right now. And so when we look at a weekly and we look at all those levels, let's look at our technical indicators. Once again, heavy volume on the way down. Remember that last move on the way down in 2018? Heavy volume. How about the move on the way up? Where's the beef? Beef equals volume. Nothing there. So, not good. No wonder we did what we did, right? We'll look on the weekly now. Not only is the weekly PPO histogram negative, the lead line is just crashing, but the signal line has dropped below the zero line. You can see it's a very rare occurrence and does not happen in an uptrend. The signal line, moving average line, only drops below when you're in bad market territories on a weekly basis. So that's where we're at. You can see the TTM squeeze momentum is down, and it's building as each week goes. And the TSV on the weekly, the lead line is below the zero line. The signal line has rolled over. Not good. So on a longer than a daily time frame, which basically just looks out for 5 days, weekly I kind of see that as a 2 weeks up to a month time frame. Yeah, it's not looking good. So there's nothing really bullish here whatsoever. I mean, there's nothing I can find that's bullish about this weekly chart. And then we switch to the monthly chart, and, it's not looking good either. So the price bars are going to look all sloppy and messy, but you can see the PPO histogram lead line below the moving average line, the signal line. It's moving lower now, and you can see the histogram is negative for the past 2 months. The TTM, we're in a loose squeeze after going from a loose to a medium, back to a loose squeeze. The momentum is moving lower. It's very rare that it gets negative, but when it does, bad things happen. 2008 to 2009. We'll see what happens. And then the main indicator that has been the most trustworthy indicator my entire career, when the market is healthy, it's above the zero line. This was the only indicator that did not agree with the price action from the 2018 highs. You can see that it crosses here in September, October of 2018 on the SPY, even earlier for the IWM. I bring up the IWM. That thing crossed in June to July. The IWM never hit new highs. We got the big rollover. Speaking of that also, the PPO monthly lead line never got above the signal line. So that's also interesting. But the main one, TSV, everything else, MACD, RSI, PPO, everything agreed with the price action. And that told us to go with the flow of the daily price action. But the TSV told us ultimately how strong it was, and it was not strong at all. So as you look at the monthly, it's no surprise that we're trading the way that we are. But if you notice, we're widening. The lead line to signal line is increasing in its distance between each other. So it's not really anything longer term we should be excited about. Weekly, nothing at all. So this bounce is a bounce. It could still turn into something, but outside of a 1 to 5 day range, there's no reason anywhere to be bullish on this market. Could this be a low? Absolutely. I'm rooting for it, rooting for everyone's 401k, but I just have to be logical about the situation. And the weekly, not pretty. And not only is the monthly not pretty, but if we just look at the TSV, this thing hasn't been pretty since the middle of 2018. So no surprises with what I'm seeing there. Now, what I want to show everybody is that if you think that we have a bottom, you always want to check your sentiment indicators. And on that note, we'll look at the VIX. Yeah, the VIX topped out right around, 86, it looks like. 85.47 was the high. And we have pulled back in on the VIX while the SPY has bounced. And yes, we are below 50. But remember, I've told you before, if we're not under 30, we probably don't have a good, solid, strong market to deal with. As you'll see here, once we get below 30, we never even got that. Wow, we didn't even get to 40 in that sell-off in 2018. So until we're at least below 40, we can't say that we've definitively seen that bottom. So until it's below 40, and necessarily, to be honest with you, below 30, that's whenever I start to be like, okay, let's see if this uptrend has any legs. We get a follow-through day. We have some nice charts, new leaders showing up, breaking out of good patterns, excellent entry signals. Then we're golden and we're dandy. But until we're below 30, even though VIX is pulled in, it's not good. And until we're below 20, I can't be bullish. 20 and below, that's whenever you can really increase size if you get the right signals, TSV monthlies lined up, blah, 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 blah. Everything I've gone over in these videos on multiple occasions. But as of right now, no, 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 no. It's good. It's a starting point. We're off the highs. But the mere fact that there's not as much fear in this market isn't necessarily proof that we have a bottom. This happened in 2000 to 2003. This happened in 2008. We never got the VIX that high. But even when the VIX hit new highs and came back in, there were still lower lows in the indices as complacency hit the market and then just natural selling hit the market. And then it took a while for fear to build again. So it's possible that if we do roll over here and hit new lows, it will just be legit complacent selling, and it won't stop until we get another bout of fear. And normally that comes with a spike in the VIX to even higher levels. So it'll be interesting to see if the VIX can't hit 100. Now, are there any sentiment indicators that are positive? Yes. Let's take a look at one. This is the Investors Intelligence, bulls versus bears. Last week, it finally crossed and showed 40% bears to 30% bulls. But with the bounce, it's already come back in. 36% bears, 31% bulls. Yes, it's very good that it crossed. This is what I need to see for a bottom. You can see 2018. But even though it's probably out there somewhere and I have to go looking for it, probably need to pay for it, I don't remember what and how this crossed in 2008. I don't remember what this looked like in 2000, 2001, but I'm pretty sure following September 11th, we crossed, and we didn't bottom until 2003. So this indicator is good at picking bottoms when it crosses in secular uptrends, but if we're switching from a secular uptrend to a secular downtrend, and this is just a cyclical bounce in a new bear market, this thing stays crossed longer. I need to go check, but just to let you know, it's a good first sign, but a first sign is all it is. And I want to show you something else that makes me a little concerned that we haven't seen the low via sentiment. This is that AAII bull versus bear chart that I was showing you. This is the 2018 market lows. This is where we're at now. Technically, there were more bulls or more bears versus bulls at the 2019 pullback lows and the 2018 lows than there are now. That's not good. Do you see this lowest low right here? You see how it's like February 2016? Do you remember what happened in February of 2016? Let's see, we're right about here. February 2016. What is that? What is that right there? If you set a major low in the SPY before a rally into those 2018 highs that saw the SPY move 50%, you are correct. So right now, we don't have that. We have more, there's less of a gap between the bulls and the bears in that sentiment survey than there was at the 2016 real bottom lows, the 2018 lows, and these lows right here in 2019. So that tells me on the retail side, it's not bearish enough just yet. So that's really all that I want to go over via the market. Basically, it means short term, sure, we can expect a bounce. But look at all of these areas of resistance we're going to have to fight through. I don't see that happening anytime soon because the market hates one thing more than it hates anything else. What is that? 1, 2, 3. Uncertainty. If it knows what the future holds, either bearish or bullish, we can game it and try to understand the market. When we're in uncertain periods where company after company after company is withdrawing their earnings guidance, yeah, that's not good. So keep an open mind here. A lot of people think we're going to retest the lows. Tells me that we probably rally a little higher. But even if we do rally, we have all these resistance levels. Now, I want to end the video by just letting everybody know that currently on an end-of-day basis, which is what this website is built upon, I'm still only in one long position, ZM. The signal was on this date here, took 50% of my profits whenever it hit 129.83 and have been partialing out since. I don't have much of a position left, but since the entry to the highs, ZM in 1, 2, 3, 4 days produced a 40% gain. Not bad. I currently have 50% of my trailing profit stops here. I have 25% right there and my final 25% stops are currently there. I'm basically out of 85% plus of this initial position, all with gains. But ZM is the only one that I've taken that's worked. The others I've issued long signals on, I haven't taken because they're not lined up lately. The most recent one, OVV, Platinum members know. It was a long signal this day. Let me get rid of the PPO here and add the BOP, balance of power. So you'll see OVV was a new long signal because it had a candle over candle, heavier above average volume, increasing green BOP, positive TSV. I didn't take it. Why? This TTM momentum squeeze indicator is still negative and there's no squeeze. But OVV, from the signal to the highs, moved 30%, 35% technically, in 2 days. Congratulations to everyone that took it. I didn't take it because it would have violated my current rules that I'm under. Now, ZM, I will remind you, why did I take ZM? Everything lined up. TSV was about to curl above the signal line, had growing green BOP. It was in a tight squeeze, still had positive TTM momentum, heavier above average volume, candle over candle, right off the 21 above the 9. That's why I took it. CTSO was the other most recent long signal. It was this one right here. Had the max green BOP, positive TSV. It was in a squeeze, but why didn't I take it? The negative TTM. Still gave it out to everyone since triggering the long signal. From the long signal to the highs, 1, 2, 3, 4, 5 days, 29% gain. Not too bad at all. Then the last one I gave that I didn't take was a bottoming signal off IMAX. IMAX, max green BOP. TSV was negative. TTM trend was negative. But you notice all the max green BOP as it sold off and all the tall green volume bars on the way down? That's why this one was a bottoming long signal. The very next day, whoopsie daisy. Looks like I cost myself a 66% gain in 1 day. Once again, congratulations to all the members that took it. But I had to follow my rules. Not only that, but in the midst of the market sell-off, IFMK triggered a long signal that I actually have no excuse for not taking, except for it was in the middle of a nasty sell-off right when I was liquidating my portfolio, right after I liquidated it. This one had the growing green balance of power, had the positive TSV, and just came out of a tight to medium to loose squeeze with positive TTM, above average volume. Didn't take IFMK, and in 1, 2, 3, 4, 5, 6, 7 sessions, IFMK moved 267%. That's one I should have taken, but I didn't take it because this is what the SPY looked like right about then. Yeah, that's why I passed on it. Mistake. Signal is a signal is a signal, and that one had everything lined up. And then the last one that came during all that period of time was YVR. Want to just show everybody. Above average volume, in a squeeze, positive TTM momentum, TSV is positive, growing green BOP. Once again, I didn't take it. Why? This is what the SPY looked like. Just a reminder, didn't take it, but a signal is a signal is a signal. What did it do in 2 days? 57% gain. So the point is, YVR and IFMK I should have taken. There's no excuse about that. But right now, I can't take these signals, CTSO, IMAX, and OVV, unless they have what ZM, IFMK, and YVR have. Right now, there's nothing like ZM out there. There's nothing like IFMK out there. There's nothing like YVR out there. If there was, I would be taking the long signals. That being said, on Friday, I got 3 bottom bouncing signals in setups that I would normally take if my monthly TSV was positive, we were an uptrending market, and or if they were perfect signals, I would take them. But they all have the same problem, all 3 of them, which I issued to Platinum members. It's available on the Platinum watch list, included a video that goes over them in detail where you should have your good to cancel buy stop limit orders and your stops if you do get filled. All 3 of those, they all have the same problem. And I'm just going to bring up a random stock. It's not CCL at all, but they all have that negative TTM squeeze and or they're not in TTM momentum, and or they're not freshly coming out of a TTM squeeze or actually in a TTM squeeze. So that's why they're not long position. So just want to let everybody know right now, cash is king. Better safe than sorry. if this is a bottom, we have plenty of time to get long. We're not just going to V-ramp right back to new highs, guys. We're going to have to consolidate. We'll move back around. New signals will start to show up. They'll start to trigger. They normally come before a bottom and a real bottom. And then we can get long and we can build our size and get maxed out well before we ever hit new all-time highs. So we're at that 20-minute mark, so I'm going to wrap it up here. If you enjoyed the video, give me a thumbs up. If you didn't enjoy the video, give me a thumbs down. Leave a comment if you have a question, concern, or you just want to talk about anything. Hit me up. I'll respond as soon as possible. If you haven't subscribed yet, hit the subscribe button and or ring that bell, and I'll see you on Wednesday whenever I do my video lesson and publish it publicly. All right, everyone.